Hello, hunters. The data blackout is over. Tech is in the spotlight this week. We have Nvidia earnings and crypto is showing cracks. However, is it due a move higher? While most of us are still reacting to what's happening, we are looking to position ourselves in the coming days in the market. Let's hunt the triggers, avoid the crowd, avoid the noise, and look at some of the key factors today that will help me make my decisions in the market. Right, so here's what's important. Today, we have Singapore Exchange to launch Bitcoin and Ethereum perpetual futures. So this is positive for crypto. Again, helping with institutional access and widening that institutional access. With this, I don't think it'll be an instant, let's say, growth in crypto and moving the price higher, but it's positive news, and I thought I'd mention it here. Crypto, however, as I mentioned earlier, is showing some cracks. It's under pressure. Bitcoin broke that 100 level that I had as a key support zone on the weekly and the monthly. And it's currently around the 95 zone. It's, in my opinion, on the way to 89 or 88, maybe even 90, around that zone of 90 to 88. And it should find support very, very soon. So here you have an article explaining that crypto has fallen, or Bitcoin has fallen 2%. Of course, the other cryptos have crashed alongside Bitcoin, and Bitcoin dominance is gaining, and that's one of the things I'll be covering later when I provide you guys with some additional insights and analysis. Another thing I wanted to mention here is the US government has agreed to open up again. So the shutdown is ending. That's going to be positive. But with that comes economic data, which I think has kept traders a little bit on edge, because it could go either way. If we have negative data for unemployment and PPI, CPI data this week, alongside FOMC minutes, which don't show signs of interest rates being reduced in December, then we could see a significant move or correction in the markets. And I'll show you the charts, how they connect with this. Nvidia earnings as well, key moment here for the markets, as well as, I'm going to have to mention this as well, we have yields, okay? We have to monitor the yields as well. But here we have Nvidia, which I've mentioned for a number of weeks now, which I felt was going to be the key moment to decide the markets, especially with the markets being on edge, with a potential AI bubble being developed, especially with Nvidia funding OpenAI purchases of their own chips. That's a worrying sign. And these tech companies moving cash between each other. Right. So, as a quick summary on this snapshot, data returns, yields are elevated. We have to watch that as well. And tech and crypto are experiencing some cracks and are being tested at the moment. So all of these things coming together this week and around the 19th, which is 2 days away on Wednesday. So we will be making some decisions, I think, before, maybe even during these key events. Now let's look at some of the key headlines out there. Again, I mentioned tech, I mentioned data coming out, I mentioned crypto. All of these things colliding, converging for this key moment in the markets. Something I mentioned for a number of weeks actually on social media. And look, the hidden truth for me is when the data flows again, the market won't just react. In my opinion, it's going to rotate. So we've seen the last 2 weeks, healthcare move up. We've seen insurance stocks, which I've traded, move up. And we've seen commodities. We've seen energy stocks move up. Will that rotation flow even further? So will there be a sell-off in tech and energy, finance, healthcare move up higher? Or are we going to see a move back into riskier assets, a risk-on move into tech and crypto? That is the key question here. So we're at this axis point. My opinion is if tech earnings disappoint, so Nvidia, I expect some sort of reset. So I expect that correction in the S&P 500, and I'll be covering the charts shortly. The next point I want to make here is if crypto breaks down deeper, I think the risk appetite might flatten a little bit, and it will take a lot longer for any bullish momentum to develop in crypto, and that could come in maybe around that Christmas period or December in the next few weeks, depending on how quickly and how badly that breakdown of crypto happens. I'll be explaining these with charts shortly. And then the third one I'm looking at is yields. So if yields and data combine, surprises might happen. So money could shift into defensives or value. So if yields are rising, then we're going to clearly see a move into value and move into defensive stocks, which we have already seen in the last 1 or 2 weeks. So in short, it's a 50-50 scenario this week. It is the most decisive week, in my opinion, for the markets. And I think it decides the trajectory of the markets in the next 3 to 6 months. So let's get right into the charts. I think one of the things I want to cover with the charts is I want to cover S&P, I want to cover Bitcoin, some of these key assets and indices, maybe some of the commodities, and then we can go into maybe 2 or 3 ideas that I have as trades. But I don't have many at the moment. The market isn't that great. All right, so this is the S&P 500 chart. Look, a number of weeks ago, I think it was around this level here. It was around 17th of October. I told my Discord members, I've also mentioned it here in the daily show and the weekly show, that we might be going through a distribution zone. And this is what I see. And I drew out this outline. You can go and watch the previous videos and verify what I'm saying is true. I've been talking about this chart and the setup here for weeks, even before the price action imitated it and followed it perfectly. So the reason why I drew this and why I thought the distribution would be something like this is because there'll be the high, a lower level here, then a fake out, and then a consolidation, which will decide where the market goes around this period of the 19th of November, coinciding with Nvidia, coinciding with FOMC minutes, which I think were going to be key as well because of the Jerome Powell mentioning that December they might not reduce interest rates because some members have mentioned that they might take a step back and let things settle. Of course, I didn't factor in shutdowns and other factors, but essentially this is what I expected. And that's exactly what's happened. We've developed in here a bit of a wedge. And I think it's a very decisive moment in the markets. And we'll see whether this moves up higher or lower or, further consolidation here within a tightening pattern. Either way, it will have to move significantly on one of these sides, up or down. So I chose to be more risk averse. I chose to protect capital. I chose to invest in defensive stocks because that's where the rotations were happening. And I sold my tech stocks around this level here. So I ended up selling Nvidia, Palantir, and a few others. So the correction, in my opinion, will be around 6 to 7%. I think it goes to around 6.3K around this level here, maybe a little bit higher, 6.4. and then we might rebuild. Now, of course, if this is a trigger for a bear market because some significant events happen where it triggers a completely different market sentiment, then we could see this really crashing down slowly. Obviously, there'll be an initial correction, then a move up, a pullback, and then a move down, and so on, and build that structure for maybe 6 to 12 months. So key moment here is November, in my opinion. And we're also seeing the VIX spike up, which I expected, and it looks like it could spike up again. The volatility is very high, the insecurity is very high, and the market is fearful with what's to come, fearful of the economic data that's to come. However, it could easily be a key momentum shift and a key moment to push everything higher if everything is positive all at once as well. So just bear that in mind. It's not all bad, right? It's one of those key moments where if everything aligns perfectly, then we can easily shift into a bullish momentum, risk on again, aggressive, buying into tech, and so on. So for me, being cash is perfect right now. Next 1 or 2 days, I might be positioning myself in a few trades, but 100% cash in stocks, 100% cash in crypto. Perfect position to be. Protection, first of all, preserving capital, and then being able to utilize that capital at the right time with momentum. Let's cover now Bitcoin really quickly. For Bitcoin, I personally think that we could shift higher, maybe to this trend line again, retest maybe around the 100, 102 zone as well for fake breakout. And then we could come back down to around the 90, 88 level, one of those two zones or within that zone, before we breach the trend line and move back up to around 107, maybe 1010, in my opinion. So it's I think personally I'm going to wait for the trend reversal. I won't be trading it short anyway here. I don't do day trading, so even if it tests this level to this point here, the risk reward isn't going to be that great because of the volatility and the support around the 90 zone. So I will choose to wait here for this to find key support and then shift into a long position for a swing higher for close to around 15-20%, maybe a risk reward around 1 to 4, 1 to 5 on this move here from the 90 zone to around the 10, 106, 107, and then maybe even a little bit higher. Ethereum as well, it's showing a bit of support here, double bottom. We have this bullish divergence developing. So we had a deeper drop yesterday, bullish divergence developing, but it's still not ready. Again, there's this trend line, descending trend line here, which I think needs to break. There's a bit of resistance around this zone as well of 3.4, 3.35, 3.4. So without that breaking, I don't see any real shift in the sentiment of Ethereum. Also want to cover the dollar, gold, and some key commodities. And then I'll see if there's any ideas, but very, very few ideas. I don't think I have any ideas today. So that's why I'm covering these ones. The Dixie is at a key point now. I, again, predicted that it would come back down. It's around that key point where we need to be. It's making a decision here. Yes, it breached this trend line, but it's more like a zone than a trend line. It's an area rather than just a trend line. I would need for a bearish scenario on crypto and let's say gold, as well as other currencies, I would need the dollar to break the 99.5 zone. So the Dixie to break that zone. The shorts, going bullish on the markets would be a breach of this 99.2 2 level, and that would signify a shift on the bearish side for the dollar, and then a move down here as I drew it for continuation down to this previous resistance and support zone, which is a key level here. Okay, so that's what I'm watching for the dollar, and I think that's where the decisions are being made. That's why it's a 50-50 with most of these, leaning towards a bearish move on risk on assets. We'll cover gold quickly, and then the yields. Gold is looking short, or is moving down here. Find a bit of support on this 20-year May. If we breach this level, we can easily, what I would like to see actually is a move all the way up to 412, 417, 411, 417, and then a move down here today. We have had that move around 4.110, 4.110. So yeah, maybe we can flip here short at any point, maybe today, maybe tomorrow, maybe on the 19th it decides. But this is really what I'm looking for. If we do break this level, we go to 3.9, and I think there is also this key support zone around 3.77, which I quite like. So I think it could be a deeper fall than most people expect, only in a scenario where it's, I think, risk on again, and there's some really positive news. It depends on how the market reacts, but yeah, it's again, it looks quite. It doesn't look nice for a swing. It probably looks nice for a little bit of a short here. 10-year yields, monitoring these, consolidating here. I want to see which direction. So if we break above, we're probably going to see defensive rotation. So rotation into defensive stocks, healthcare, energy again. And but if we come back down to this level, I will monitor. Okay, final one I think is worth discussing. It's US oil, considering the energy sector is moving, and I think it's on the verge here for a breakout. I mean I drew some squiggly lines in terms of what I see in terms of price action, and it's kind of, it has to break this trend line here on the RSI, and then break this trend line, but then it has a bit of resistance here. So it's kind of a zone. If I draw this zone for you, I think you understand it. Something like this, where it's testing these zones. So we enter this one, it might resist around here anyway. So we have to see. But I'm not trading US oil itself. I will be trading energy stocks. I don't have any ideas ready to discuss here today, but maybe tomorrow we have some ideas popping up on our screens that will be suitable for my strategy, where I feel confident sharing with you guys as a good idea. Right, so that's it from me today. Let's wrap up here. I will say, comment below. Let me know which assets you think are worth looking at. Let me know which assets you think are worth trading at the moment. Maybe even some stock ideas if you have, maybe some cryptos that you like. I was looking at Uniswap. I think Uniswap could be quite nice, but I'll discuss that tomorrow. And let me know what your bias is. Where do you think the market will go? Will we go short? Will we have that correction S&P 500? Will we go to 90K on Bitcoin? All of these things, I would like to hear from you guys in the comments below. If you want full chart breakdowns, live entries, alerts, you can join the Trend Hunters community. The link is below in the description of the video, and I'll see you tomorrow.